Good weekend, all. I'm Epstein with your financial market wrap-up, and this wrap-up is for Friday, and we're sitting here now on the 7th of October, 2022. All right, so the market gets what the market was looking for. The numbers that were being looked at, and I mentioned this in yesterday's video, was 250,000 to 275. And that was for new jobs. And I gave you the outlier numbers as well. Well, you came right in the center at 263. And so what does the market do? It basically crashes. And that's the schizophrenia part and why it's so hard to go into major reports. You can do what you want. I'm going to stick with what I want. And the reason is I've learned over 50 years of trading that they could give me the numbers ahead of time. I wouldn't know which way the reaction's going to be. And, you know, I hear people say, well, I got a whisper number. Somebody really knows. It doesn't matter. You don't know how the market's going to react. That's what it comes down to. So what happened today is the market has decided, rightly so, that I think anything with a 2 in front of it is going to be too high. In fact, I don't think the Fed is going to even think about pivoting until you get under a 200,000 number, closer to 150,000 jobs. For the wage inflation, it didn't advance much. That's a good number. Now we're going to get CPI and PPI numbers. They're coming out Wednesday or Thursday of this week, but I don't think that's the other hammer. You'd have to fall so much in them that would give pause to the Fed, but even then, you still got the jobs. So right now, there's about a 90% chance, if you look at the Fed watch numbers, of a 75 basis point hike. So let's assume that you get softer numbers, PPE and the CPI. Maybe it drops back to 60 to 75%. Is that going to be enough to stop them? That's the real problem. And all of this keeps the Fed right there. Have you watched all the Fed members talking? They're all hawks. They're not going to give up easy. I hear people say that they'll break it. You know, there's no way they can manage it. You know something? I don't know what they can do. I'm not in that camp either. I think they're bright enough that they'll try to figure out when's enough so that it slides. In other words, the economy slides and they're not pushing it. They're very aware of it. We'll see. These are bright people. Doesn't mean they'll get it right. It's a very hard tightrope because, remember, everything's lagging and you're trying to guess what it'll do. So when we take a look at the S&P 500 index, and this is your weekly chart, we have the 18-month moving average of closes. This is the weekly series. We start off with this chart, which is the monthly. And ever since you've been under it at the beginning of the year, what has the pressure been on the market? And that is the one thing you learn. Take my charting courses, get an idea of what this is about. When you do that, it tells you where the bias of the market is. Now, when we come to the weekly charts now, you're under the 18-week average. Bias is down. You're really testing the lows of June. That's what you're effectively doing. So people that thought it wouldn't come back and test it, wrong. You're back to testing it. So that's the very first thing. People that thought that was the low of the year, you just closed under it. And there were a number of them. I hate when the people do that. I'm not going to use names because these are generally very good technicians, but they want to make a name. They're the first one out on TV. You have seen the low of the year. Well, I want to argue with you. It's lower now. Okay. We take a look at what the chart is doing, and as it went up in steps, it just came back down in all those steps. The trend is down. Trend is defined by peaks of lower highs and valleys of lower lows, if it's a downtrend. If it's an uptrend, a valley of higher lows, and higher highs. And it flipped on you. You can see it. It's pretty simple. Where's the market stopped? You'll hear me say this over and over. When I see the 200-week average hit, I will tell traders, cover your shorts. If it's on the upside, cover your longs. Why? That's a 4.5-year moving average. It's a spot the market doesn't just typically slice on through. It's also got the Bollinger Band with it. So I think the professional money's lifting shorts here in anticipation of a bounce for whatever reason, and off the bounce, they might get short again. That's how I'm viewing the chart. Momentum down, bias down. When we come to the Dow, You tried first 2 weeks ago, the 200 week in the Bollinger Band. You slid through it. You came back up to it this week. That's very typical. And you're staying under it. You're caught now between the support of the Bollinger Band and the resistance, because you're under it, of the 200 week. If you clear this week's high, then it's the 18-day average. But let me give you my secret. There is nothing on this chart that's bullish. If you get to the 100 week, or the 18 week rather, the traders, it's the 18 week in red, that's where they want to sell the market. They'd have stops way up over that high, and they'd be looking, hey, I was able to catch a bounce in the market to go short. In the NASDAQ, the first challenge of the 200 week in gray, the Bollinger Band. Where do you think I'd say the market's going to try to stall? I do want my clients to get short on rallies. So I'm looking for bounces, why they'll come, when they'll come. Markets trade. I can't give you anything other than that. In the Russell, I've said this is the strongest market, but now it too has got its problems, and my guess is the pros will sell this market. The strongest one will be the first one to rally into the combination of resistance of the 200 week and the 18. The stops would then be over 1923.80, looking to see if you can drive down into the Bollinger Band. But if you first make a lower low this week, I don't think the pros will sell it. In other words, they don't want to get caught in that whip, because then you can end up with higher lows, higher highs, change the pattern. It's got to be you just go up there. In the 30-year bonds, you have the Gorilla Glue trade, named after the famous glue that we all buy at the different hardware stores. The market latched on to the lower band, it just keeps it, and away you go. Why would you get a big bounce other than short covering? The Fed isn't changing its plan. Now, already people are saying, well, you know something, the 20 and the 30-year, they don't have to do this because of blah, 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 blah. I get it. I'm not interest rate curve specialist. But interest rates aren't going down. That's what I can tell you. They're going up until the Fed is through, and they're nowhere near through. Get the nonsense out of your head that they're pivoting anytime soon. Soon being this year. Get a sudden break in the jobs data, and all of a sudden you're under 200,000. I'll be the first guy on the street saying, I understand people talking about the pivoting. I think it's early maybe, but I understand, and we got to be careful. Each report, instead of you getting jobs data that you would think would break the market, you probably get a rally off it. I'll change my thinking like that. I've been through this. You're too soon. In the 10-year, it's identical. The Gorilla Glue trade. They can form embedded readings and take you down further into the beginning of 2023. So keep your eye on that too. In the dollar, you want to be bullish until there's a reason not to be long the dollar. It's the rate hikes, the rate hikes, the rate hikes, and the strength of the U.S. economy. It's not the hikes by themselves. The hikes by themselves can hurt a business, but we are so insulated. We're such a large economy, comparatively speaking. Keyword, comparatively speaking, that we keep shaking it off and moving up. So breaks in this market continue to be buys until the red line, got it? I'll give you the secret. Close it under 79. Don't want to be long anymore. Got to walk away. Euro currency. Are we embedded? Well, you are. So what are you supposed to be doing? Selling the rallies, off the bounces, still looking for lower lows. Tremendous pressure is being put on the European Union from two ends. What price do we have again in Brent? It's pushing $100 a barrel. OPEC did not do them a favor. OPEC joins Russia against the Eurozone. Don't have to believe me. Don't care if you do. That's what they in effect did. Our president can't do anything about it. If we had a better energy policy, I've talked about it till I'm blue in the face, we'd be a better country. And yes, you can do it in being green. I'm very attuned to staying green. Any way you go about it, market's still a sale because you're embedded. Get the red line to be over 21 on a close. I don't want to be short anymore. That's not what I think is going to happen. I think you want to be selling those rallies. I tell clients not to sell under Bollinger Bands. I won't change. You're right now at 72.85, literally right under the 72.95 of the Bollinger Band. So this week you're under it. Last week, were we under it last week? You're right on the low, 2 weeks in a row under it. And the week before, you closed at 73.48 under it. So that's 3 weeks in a row. You rarely go beyond 5 weeks. So you're getting to the point where you're pulling on this band so much, it's probably going to give you an opportunity to get short, but you want to get short. And you got a bearish crossover. You just got the 18-week under the 200-week, and you made a lower low in the process. When we look at the yen, what can you say? They're determined to just keep their currency down, to embed inflation. They can't seem to get it on their own. So on a comparative basis, they're buying the inflation into the economy, which is what the bank wants. So this has been the carry trade currency. It's really pretty simple. And that's the way it's going until it ends. In Bitcoin, as long as the stock market's bearish, I'm bearish with it. You have an embedded reading. I think the pros are going to sell short at the 18-week average, as long as if the market gets up there at 21,553, I say if, it's $2,000 away, if the red line is not over 20. If it's over 20, not 21, they won't sell it. I'm looking for the market to come down here. Another way the traders are going to sell it, in my opinion, under this week's low, stops back over this week's high, see if the market comes down. So I'm looking for ways to be short. Now you're getting your differential between Brent and WTI, and lo and behold, our energy is rushing up faster than the Brent price. You wouldn't think it, but it is. Remember, just a week ago, the differential on them, 1 week ago, here we are on the 30th, right? And that differential was 847. It's crashed in here. Now we get over to the energy and the Brent. You just crossed right here, 98.51, right through here. 95, was that 95.81? Let's take a look. I want to see myself. I think it's 95.81 that the market's got there, and I'll be able to get to it in a second. I missed changing the line, but I think, yeah, 95.81, and look what it just did. This is the end of last week. This is this week. You just added on to this market 11%, $10 in price. So you should have an arrow here pointing up. I just made a mistake and didn't put it on. And now the market is out of the downtrend. This breaks that level to the downside. Has it joined a real uptrend as a chartist? Take the name off the chart. Always do that, mentally or physically. Take it off. Not yet. Resistance up at that 18-week average, same in ours. You came up and I just missed putting those arrows. By the way, in ours, and I'm going to come back to it right here, our WTI, you just lost the embedded reading. So when you lose an embedded reading, where are you going? Most of the time, heavy amount most of the time. You're going to go to the closest moving average above it, main one. It would be the 18, the 100, or the 200. In this case, it's the 18. You're going to have a trading bottom now in place in the market. Rebob gasoline. I don't know why I missed all the energies, putting the arrows pointing up. It did what I thought. When the market got down here, go back on these videos. You will see them on YouTube. I said, I don't think you want to be short anymore. First challenge of a 100-day average and a Bollinger Band I teach. You don't want to be short anymore. That's exactly what happened. I think you're headed back to the a challenge of the 18-week moving average if you get a reading over 21 this coming week. That's still the key there. So you put it together, you come up with game plans, you try to figure out where the markets might go. And with that, what I try to do is give you an idea. Now, if you'd like to try for free, so don't go away, for free, my research, if you haven't tried it before, this is $60 every 30 days. It's free to you, no credit card to get it. I want to make it available. I want to prove what we've got. I'm also thinking of starting another subscription service just for lost embedded readings. I can't do it in the current ones because it screws my brain up. I'm trading with a certain set of rules on those, and then to suddenly break those rules because of what happens in the embedded reading won't do it. But if you look behind me, order entry, morning videos, twice daily updates, if not with special updates, and then special reports. Everything we've got, I'd like to give you a couple weeks. No, it's not going to be 30 days. It's going to be 2 weeks. So if you'd like 2 weeks free trial to see what I do, how I do it, I want to give it to you. How do you get it? You can go to our website under free offers. You just follow my finger, put your cursor up anywhere here. You'll see an icon. Give it a click and away you go. I'm Epstein. Have a great weekend. I'll see you Monday.